At 6:47 this morning Eastern Time, inside a federal courthouse in Manhattan, something happened that has never occurred in the 247-year history of American presidential accountability. Multiple sources, and I'm talking about people who have direct relationships with both federal law enforcement and international banking regulators, are confirming to us that Donald Trump's foreign bank accounts across 3 continents have been frozen, not restricted, not audited, frozen. This is the most consequential enforcement action in modern presidential financial oversight, and it represents a stress test on whether the international banking system can hold a former president accountable when American institutions have repeatedly failed to do so. I need you to understand the weight of what I am about to tell you, because what happened in the last 12 hours isn't just about money. It's about whether someone who spent decades hiding assets in offshore accounts can finally be forced to play by the same rules as everyone else. If you care about financial accountability and the rule of law over the next 72 hours, you need to subscribe to this channel right now and turn on notifications, because the developments ahead will determine whether international institutions can succeed where American courts have been stalled for years. This is not speculation. This is reconstruction based on direct knowledge from multiple sources who were briefed immediately after the enforcement orders were transmitted. Here's what we know. According to 3 independent sources, 2 from federal banking oversight, 1 from an international regulatory body, the freeze orders were executed simultaneously across accounts in Switzerland, the Cayman Islands, and the United Arab Emirates, starting at 4:21 a.m. Eastern Time. The coordination itself is unprecedented. These are not American banks subject to Treasury Department jurisdiction. These are foreign institutions that made independent determinations based on suspicious activity reports, money laundering red flags, and what one source described as a pattern of asset concealment that finally triggered automatic enforcement protocols. Flight tracking data, which is publicly available through websites like Flight Radar 24, shows that a Treasury Department aircraft departed from Washington Dulles at 11:47 last night, landed in Zurich at 6:14 a.m. local time, remained on the ground for exactly 43 minutes, and then departed for an undisclosed destination. The timing is not coincidental. Former federal banking prosecutor Catherine Walsh, who spent 17 years with the Southern District of New York prosecuting financial crimes, told MSNBC this morning that this kind of coordinated international freeze doesn't happen by accident and doesn't happen without overwhelming evidence of financial wrongdoing. According to documents that were briefly visible on a Swiss regulatory website before being taken down, visible for exactly 19 minutes according to time-stamped screenshots, the freeze affects accounts holding an estimated $247 million in liquid assets. That figure has not been officially confirmed, but 3 separate sources have given us numbers within $15 million of that total. Now here's what concerns legal experts most, and this is where it gets dangerous for Trump's entire financial empire. When foreign banks freeze accounts, they're not doing it as a favor to American prosecutors or because of political pressure. They're doing it because their own internal compliance systems detected patterns that trigger mandatory reporting under international anti-money laundering treaties. Switzerland, which has spent decades trying to rehabilitate its reputation after decades of enabling tax evasion, does not freeze accounts lightly. The Cayman Islands, despite its reputation as a tax haven, has been under enormous pressure from the OECD to demonstrate compliance with international financial transparency standards. The UAE, which has been working to position Dubai as a legitimate international financial center rather than a haven for questionable money, cannot afford to be seen as protecting American corruption. All 3 jurisdictions making enforcement decisions simultaneously suggest the evidence triggering these freezes is not marginal. It's overwhelming. Let me walk you through exactly how we got here, because the timeline matters enormously and every single step was documented. This did not happen overnight. This was a cascade of decisions, financial maneuvers, and international pressure building over 18 months, and what happened this morning was the inevitable result of Trump believing the rules simply didn't apply to him. Start with March 2024. That's when the Manhattan District Attorney's Office, during discovery in the criminal business fraud case, first obtained what's called a suspicious activity report from Deutsche Bank. These reports are mandated filings that banks must submit to the Treasury Department's Financial Crimes Enforcement Network when they detect transactions that might indicate money laundering, fraud, or sanctions violations. The Deutsche Bank SAR identified 14 wire transfers totaling $83 million that moved from Trump Organization accounts to offshore entities between 2019 and 2023. The transactions were structured, broken into amounts just below reporting thresholds, and the ultimate beneficiaries were obscured through 3 layers of shell companies. Now, here's what most people don't know. When a SAR is filed on a U.S. person involving foreign accounts, Treasury automatically shares that information with financial intelligence units in the countries where those accounts are located. It's called the Egmont Group, a network of 166 financial intelligence units that share information to combat money laundering. So when Deutsche Bank filed that SAR in March, within 48 hours, Swiss banking regulators had the same information. So did authorities in the Cayman Islands. So did regulators in the UAE. All 3 jurisdictions opened what's called ongoing monitoring of Trump-related accounts. Not investigations, not freezes, just enhanced scrutiny, watching for additional red flags. June 14, 2024. This is where the pressure intensified. The House Oversight Committee, following up on the Deutsche Bank revelations, issued subpoenas for records related to foreign financial transactions by Trump and his immediate family. Trump's legal team responded with the same playbook they've used for 8 years: delay, obstruct, claim executive privilege despite Trump no longer being president, and file motions to quash the subpoenas, claiming they're politically motivated harassment. But here's what Trump's lawyers didn't anticipate. The subpoenas weren't just going to American banks. They were going to foreign banks through mutual legal assistance treaties, or MLATs. These are international agreements where countries agree to provide legal assistance to each other in criminal investigations. And under MLAT protocols, when a foreign bank receives a formal request from U.S. law enforcement, they're required to conduct their own review before deciding whether to comply. That review is where this story takes its critical turn. Between June and September 2024, Swiss banking authorities conducted what sources describe as an intensive forensic analysis of Trump's accounts at Credit Suisse, now absorbed by UBS after Credit Suisse's collapse. The analysis revealed what 3 different sources, using almost identical language, described as a systematic pattern of asset concealment designed to evade both U.S. tax obligations and international reporting requirements. The pattern included establishing accounts under corporate entities with no disclosed connection to Trump, routing transactions through intermediary banks to obscure their origin, timing deposits and withdrawals to avoid triggering automatic reporting, and maintaining account balances just below thresholds requiring disclosure under FATCA, the Foreign Account Tax Compliance Act. September 23, 2024. This is the moment when everything changed, though almost nobody noticed at the time. UBS, in response to the MLAT request, filed its own suspicious activity report with Swiss financial regulators. That SAR, according to someone who reviewed the filing, contained evidence of approximately $127 million in assets that appeared in Swiss accounts with no documented source and no reported connection to Trump's disclosed income. The discrepancy was stark. Trump's financial disclosure forms filed with federal ethics officials showed his net worth but made no mention of these accounts. His tax returns, which we now have partial information about from the Manhattan DA investigation, showed income levels incompatible with the assets appearing in Switzerland. Someone was hiding money, a lot of money, and Swiss regulators, facing enormous pressure to prove they're no longer enabling financial crimes, decided they'd seen enough. October through December 2024. Behind closed doors, Swiss authorities began coordinating with their counterparts in the Cayman Islands and the UAE. This coordination, according to sources familiar with these discussions, was extraordinary. Banking regulators don't normally work together across jurisdictions unless they're dealing with major organized crime or terrorism financing. But in this case, the pattern appeared to span all three locations, with suspicious transactions flowing between accounts in ways that suggested deliberate efforts to move assets beyond the reach of U.S. authorities. The coordination involves sharing account records, transaction histories, and beneficial ownership information, data that's supposed to be confidential but gets shared when regulators suspect serious financial crimes. January 2025, Trump's inauguration. Here's where the political calculation became impossible to ignore. For 8 years, Trump claimed he was the victim of political persecution, witch hunts, unfair treatment, but now he's a private citizen. He has no executive privilege, no presidential immunity for financial crimes committed before or after his presidency, no protective shield. And international banking regulators, who had been cautious about taking action against a sitting president due to diplomatic complications, suddenly had no diplomatic constraints. A former president is just another bank customer, and if that customer's accounts show evidence of money laundering or tax evasion, the banks have legal obligations to act. Warren Buffett, and this is where this story gets even more significant, has been silent on Trump's financial practices for 9 years despite being repeatedly asked for comment. Buffett, whose reputation for integrity and whose statements on financial ethics carry enormous weight in global banking circles, has maintained what people close to him describe as strategic silence, refusing to criticize Trump publicly despite obvious disagreements on economic policy and personal conduct. But 3 days ago, Buffett broke that silence. In a private gathering of Berkshire Hathaway board members, details of which were leaked to the Wall Street Journal yesterday, Buffett reportedly said, and I'm quoting from notes taken by someone in the room, "When someone spends decades structuring financial arrangements to avoid transparency, eventually the math catches up with them. You cannot indefinitely maintain asset positions that don't align with reported income without triggering scrutiny from institutions whose survival depends on maintaining regulatory credibility." That statement, while carefully worded to avoid direct accusation, represents something profound. Buffett wasn't talking about Trump by name, but everyone in that room knew exactly who he was referencing. And within hours of that meeting, according to financial industry sources, the Berkshire Hathaway Compliance Department quietly instructed all subsidiaries with banking operations to review their own due diligence protocols on high-profile customers with offshore accounts. The message was clear. The world's most respected investor just signaled that financial hiding games are reaching their endpoint, and institutions that continue enabling them risk their own credibility. Which brings us to this morning at 6:47 a.m. Eastern Time. The Swiss Financial Market Supervisory Authority, known as FINMA, issued what's called a precautionary freeze order on 3 accounts associated with Trump or Trump Organization entities. Within minutes, the Cayman Islands Monetary Authority issued identical freeze orders. Within the hour, the UAE's central bank followed. The coordination was not coincidental. This was planned, synchronized, and designed to prevent exactly what Trump has done repeatedly throughout his career, moving assets out of one jurisdiction the moment enforcement action appears in another. Subscribe to this channel right now if you want to follow where this investigation leads, because the implications are staggering, and what I'm about to show you is information mainstream media won't fully explain for at least another 48 hours. Now here's where this gets really bad, and you need to understand the mechanism because it determines what happens next. When foreign banks freeze accounts, they're not making arrests. They're not seizing assets permanently. They're initiating a process. Under international banking protocols, the freeze is temporary, typically 90 days, during which regulators complete their investigation and make a determination about whether the accounts were being used for illegal purposes. If they find evidence of crimes, the funds can be seized and potentially returned to defrauded parties or transferred to law enforcement. If they find no evidence of crimes, the accounts are unfrozen and returned to normal operation. But here's the critical detail. During that 90-day freeze period, the account holder cannot access the funds, cannot transfer them, cannot move them to other institutions, and cannot close the accounts. The money is locked. For most people, a frozen bank account is an inconvenience. For Donald Trump, whose business model has always depended on constant access to liquid capital to satisfy creditors, pay legal fees, and maintain the appearance of wealth, a frozen account is a catastrophe. And we're not talking about one account. We're talking about accounts across 3 separate jurisdictions holding, according to the best information we have, approximately $247 million in liquid assets. That's money Trump cannot access to pay the $454 million civil fraud judgment in New York. That's money he cannot use to fund his legal defense in 4 separate criminal cases. That's money he cannot deploy to satisfy the $83 million defamation judgment to E. Jean Carroll. All of that cash, assuming it's even legally his, is now beyond his reach for at least 90 days. But it gets worse, and I mean significantly worse, because the 90-day freeze is just the beginning. If the regulatory investigations find evidence of money laundering, tax evasion, or sanctions violations, and multiple sources are telling us the initial evidence is extremely concerning, those 90-day freezes can extend indefinitely while criminal investigations proceed. We're potentially looking at Trump being unable to access these accounts for years, not months. And during that time, his creditors in the United States are still demanding payment. The judgment interest is still accruing at 9% annually. The legal bills are still piling up, and Trump's entire financial house of cards, built on the assumption he could always access hidden assets when the walls closed in, is now facing structural collapse. Legal analyst Andrew McCarthy, a former federal prosecutor who's been remarkably measured in his commentary on Trump, told Fox News this morning something that should make everyone pay attention. McCarthy said, and I'm paraphrasing his commentary, when multiple foreign jurisdictions simultaneously freeze accounts, it's not because they're coordinating political persecution. It's because they've all independently reached the same conclusion. The evidence of financial wrongdoing is too strong to ignore, and their own regulatory obligations require action. Coming from McCarthy, who has defended Trump on multiple legal fronts over the years, that assessment carries enormous weight. Now here's the kicker. Trump's legal team has 3 options, and every single one creates catastrophic problems. Option 1, comply with the freeze, cooperate with the investigations, and provide documentation proving the funds are legitimate. But that compliance requires revealing the source of the money, the purpose of the offshore accounts, and potentially admitting to tax and disclosure violations that could trigger separate criminal charges. Option 2, fight the freezes through legal challenges in 3 separate foreign jurisdictions, which requires hiring expensive international lawyers, navigating legal systems where Trump has no political leverage, and potentially extending the freeze for months or years while the litigation proceeds. Option 3, claim the accounts aren't his, distance himself from the funds entirely, and argue he has no standing to challenge the freezes. But that third option means abandoning access to $247 million and potentially admitting that his disclosed financial statements have been fraudulent for years. This is a classic catch-22. Every path forward requires either financial disclosure Trump has spent decades avoiding or legal battles Trump cannot afford without access to the very funds that are now frozen. It's an impossible situation built by decades of financial opacity finally colliding with international enforcement mechanisms that don't care about his political narrative, and the fracturing inside Trump's inner circle is already visible. Sources close to Trump's legal team, and I'm talking about people who have been with him through multiple investigations, are describing what one person called crisis-level panic. Trump's lawyers understand that foreign bank freezes are fundamentally different from U.S. court proceedings, where they can deploy delay tactics and political pressure. You can't stall a Swiss banking investigation. You can't appeal to Trump's base to pressure the Cayman Islands Monetary Authority. You can't hold rallies to intimidate UAE regulators. International banking enforcement operates in a realm where Trump's political power has zero leverage. 3 days ago, according to someone with direct knowledge of internal discussions, Trump's longtime financial advisor, Alan Weisselberg, currently serving a 5-month sentence for perjury related to his previous tax fraud conviction, was contacted through intermediaries and asked whether he would be willing to provide testimony to foreign banking investigators in exchange for reduced sentencing. Weisselberg, who knows more about Trump's financial arrangements than possibly anyone outside the Trump family, declined. But the fact that foreign authorities are exploring witness cooperation from someone currently incarcerated suggests the investigation is far more serious than a routine compliance review. Then came yesterday. Christopher Kaise, one of Trump's lead attorneys, filed emergency motions in federal court attempting to block U.S. cooperation with foreign banking investigations. The motions argue that the international information sharing violates Trump's constitutional rights and represents political persecution coordinated by Biden administration officials working with foreign governments. Legal experts reviewing the filings are calling them constitutionally frivolous. Former federal judge Patricia Hammond, now retired and teaching at Columbia Law School, reviewed the motions and told CNN, "There is no constitutional principle preventing foreign governments from enforcing their own banking laws. The motions reveal desperation, not legitimate legal theory." But here's what I'm watching most carefully, and this is the detail that should terrify anyone who has spent years enabling Trump's financial practices. The freezes didn't just target accounts directly in Trump's name, they targeted accounts held by Trump Organization entities, accounts held by trusts listing Trump family members as beneficiaries, and accounts held by shell companies that forensic analysis connected to Trump through layers of corporate structures. That comprehensive approach suggests the regulators already conducted extensive investigation before issuing the freeze orders. They already traced the ownership. They already penetrated the shell company structures. They already know whose money this is. The freeze isn't the beginning of the investigation. It's the culmination of an investigation that's been proceeding quietly for months. Conservative legal commentator Alan Dershowitz, who has represented Trump and defended him through 2 impeachment proceedings, was asked on News Nation yesterday whether Trump has legitimate legal defenses against international banking enforcement. Dershowitz's response was remarkable. He said, "If the accounts contain legitimately earned income that was properly disclosed, then this is a simple matter of providing documentation and the accounts will be unfrozen. If the accounts contain funds that were deliberately hidden to avoid taxes or legal obligations, then we're talking about serious financial crimes that no lawyer can defend." That conditional statement from someone who has defended Trump consistently is essentially saying if Trump is innocent, he should be able to prove it immediately. And if he can't prove it, the silence tells you everything you need to know. If you're still watching and you're not subscribed, what are you waiting for? This channel brings you analysis you cannot get anywhere else, and what I'm about to tell you next is the most important part of this entire story. Hit that subscribe button and turn on notifications. So what does this actually mean going forward? Let me lay out the 3 scenarios that are now on the table because we are running out of time and the clock is ticking faster than most people realize. Scenario 1. Trump cooperates, provides documentation proving the funds are legitimate and the accounts are unfrozen within the 90-day window. Probability, I give this approximately 15%. Why so low? Because cooperation requires transparency. Trump has avoided his entire career. It requires disclosing sources of income that may conflict with his tax returns, financial disclosure forms, and sworn statements in various legal proceedings. If those documents show the money is clean, why has it been hidden in offshore accounts for years? The cooperation scenario only works if Trump can provide documentation that's consistent with everything he's previously disclosed, and multiple sources familiar with his financial practices say that consistency doesn't exist. Scenario 2. Trump fights the freezes through international litigation, extends the process for months or years, and eventually settles by paying substantial fines while the accounts remain restricted indefinitely. Probability, approximately 40%. This is Trump's historical pattern: delay, obstruct, settle without admitting wrongdoing. But international litigation is extraordinarily expensive, potentially costing tens of millions in legal fees across 3 jurisdictions. And during the litigation, the funds remain frozen, which means Trump is incurring massive costs without access to the capital he needs to pay those costs. It's a financial death spiral. But it's also the approach that avoids the immediate disclosure that Scenario 1 requires, so it's likely Trump's default strategy, despite its long-term unsustainability. Scenario 3. The investigations conclude with evidence of money laundering or tax evasion, the funds are permanently seized, and criminal charges are filed in multiple jurisdictions. Probability, approximately 35%. Multiple sources are telling us the initial evidence triggering these freezes is significant. Swiss regulators don't freeze accounts of former heads of state without overwhelming evidence because the diplomatic and financial implications are enormous. The Cayman Islands and UAE don't coordinate simultaneous freezes without believing the legal exposure to their own jurisdictions is severe if they don't act. The probability this ends with permanent seizure and criminal charges is uncomfortably high, and it represents the scenario with the most catastrophic implications for Trump's entire financial empire. The remaining 10% probability covers unlikely outcomes like political intervention forcing the accounts to be unfrozen, or international banking regulators deciding the evidence is insufficient and dropping the matter entirely. Neither outcome is plausible given the intensity of current international pressure for financial transparency and the apparent strength of evidence that triggered these freezes. Here's what to watch in the next 48 hours. First, whether Trump or his legal team files additional emergency motions attempting to block information sharing between U.S. authorities and foreign banking regulators. Those filings will reveal the level of panic and the specific information Trump is most desperate to keep hidden. Second, whether any of Trump's business partners or financial advisors begin cooperating with investigators. International banking prosecutions often break through witness cooperation from people who realize their own exposure and decide to cut deals. Third, whether major U.S. financial institutions begin reviewing their own relationships with Trump Organization entities. If they conclude the international scrutiny creates unacceptable reputational risk, we could see domestic banks terminating relationships, which would compound Trump's liquidity crisis. But here's why this matters beyond Donald Trump, and the stakes are far bigger than one individual's financial practices. For decades, the extremely wealthy have used offshore accounts to avoid taxes, hide assets from creditors, and structure financial arrangements that would be illegal if conducted domestically. The system has enabled massive wealth concealment, created a two-tiered financial system where the rich play by different rules, and allowed individuals to claim poverty in U.S. courts while maintaining hidden fortunes abroad. The Trump freeze represents a potential inflection point. If international banking regulators can successfully enforce transparency requirements against a former U.S. president, it signals that the offshore haven system is becoming less sustainable. It suggests that international cooperation against financial crimes is reaching a threshold where even the most powerful individuals cannot simply hide assets and expect institutions to look the other way. Smash that like button right now if you understand why this precedent matters beyond partisan politics, because what happens in the next 90 days will determine whether financial accountability applies equally or whether wealth and power still buy immunity.